Second consecutive day of losses for the benchmark indices, along with the mid-cap indices losing out for the fifth straight day. We are looking at substantial weakness. Hello and welcome. This is the Market Wrap. Nikki, on the whole, when it comes to the benchmarks and the Nifty specifically, we are looking at a very choppy day indeed.
Disappointment crept into the markets right from the word go. So we just saw Nifty struggling, and it was the last hour of the trade where we actually saw the hit coming in. Disappointing set of numbers along with the choppiness ahead of FNO expiry, and also the reports that Indian Army has hit across LOC with Pakistan has actually not gone well for the markets. We've seen markets really tanking, and it's gone down. The hit that we're looking at today, the loss is around 0.5%, which is taken Nifty below that 9,400 mark. Though there were some attempts that we saw in the noon trade, but again that army report news again dragged the markets lower for the day, and we saw a close of below the 9,400 mark. Today we're in conversation with Vishesh Chauhan, head of derivative and quantitative research of Monarch Net Worth Capital. Hello sir. A quick question. Today we saw Nifty coming below that 9,400 mark. What is the key level to watch out for Nifty going forward now?
Well, you see, Nikki, what happened, like when we started the series was started on the note that we had the highest OI built up in the 9,000, 9,500. So there was not much of the consensus when it comes to the put writer. So what has actually happened, as the series moved on, we saw base shifting from 9,300 and 9,400. Now, the volatility at the same time was not rising. So what it means along with the low volatility, there was a huge put call ratio. What it means, there was heavy put writing. And with some amount of disturbance in the global market, that volatility is now hinting a signs of moving higher. So I think in the last 3-4 trading session, the price action was indicating that as soon as we break a 9,400, there is going to be a substantial amount of cut. So what has happened in yesterday's session, as we move closer to 9,400 and during the session we move around 9,500, it seems like 9,500 call writers dominated. And the day before yesterday, if you saw a couple of times we managed to give a close above 9,500. So that gives a lot of confidence to those 9,500 put writer. They said that in this series we may get a 9,500 call writer running for a cover, but it did not happen. And those 95 put writers are now running for the cover. And at the same time, if you see in today's session also, what has happened, 9,400, which happened to be a huge OI base followed by a 93, that is showing a sign of a covering, and now it means that we are heading for a much steeper level to speak. My guess that expiry around 9,400 should be a very good for the hope for the bulls. But if 9,400, the way it has broken today, I guess 9,270 followed by 9,050 is very much on the cards.
It's interesting that Vishwesh has spoken about the open interest levels right now, and that's exactly what I'm going to talk about what's happened today with respect to the options market. As you can see, this blue bar out here indicates a writing of calls in the 9,400 mark, exactly as Vishesh was talking about. Other than that, we've seen very little activity. When it comes to open interest and maximum open interest, that continues to lie between the 9,300 put and the 9,500 call, and that's followed by 9,600. But as you can see here, 9,400 call doesn't have it's not behind when it comes to open interest. That said, Vishwesh, I'm going to come back to you on the kind of rollovers that we've seen, at least in futures. So far, less than what we've seen in the previous 3-month average. What are you reading from the rollovers?
See, I guess what happened that in this series there was huge amount of confidence and optimism built around those put writers, that we are again gonna have a series wherein the put writers will dominate.
Right.
So now when the market is falling, people do not want to roll their position. If you see today's Nifty rollover data, it is only 36%. And
right.
If you see sector-wise also, we are not witnessing a above average. I think so far the highest rollover what we have seen is in the IT followed by the banking. So in my opinion, a lot of people caught sleeping in the banking stock, especially the mid-cap PSU bank, because the way it has rallied. And I think now the good news is not coming from the government front in terms of forming the bad bank.
Right.
I think there is a huge amount of unwinding happening. At the same time, we are seeing some sort of a short also. So to answer your question, why the rollover is not happening, people do not want to roll their position into loss. Probably, I guess a rollover may pick up tomorrow, but my guess is that we are headed for a lower levels. From that point of view, the series may open on a note where we may have a higher call built up and a put level go down around a 9,000 level.
Vishesh, you also briefly alluded to the PSU index, and I think you have a call on the mid-cap PSU specifically. Can you tell us a little more about that?
See, I think what has happened that in the last month, the way the mid-cap PSUs has rallied, a lot of the stocks have rallied ahead of the their structure. So in my opinion, that is where we are seeing superb unwinding. In yesterday's session, we saw Bank of India. Today also there was a carnage at Bank of India. But my sense is that somewhere this stock may find a sanity. So I
Right.
think in the mid-cap PSU bank around the current level, Oriental Bank of Commerce gives us a lot of comfort. Our sense is that Oriental Bank of Commerce may surprise compared to the pack. But if I had to take a call on entire mid-cap PSU bank, probably I may expect another 5 to 10% cut
Okay.
in the entire pack. And if I had to pick up only single stock, probably the Oriental Bank of Commerce would
Right.
be one.
Okay, so Nikki, I'm going to come down to some of the nifty gainers, and in that case, auto stocks stood out.
Yeah, auto stocks stole the show clearly today. We saw Maruti Suzuki ending the day up with gains of around 2.6%. Next in the list, we have Mahindra and Mahindra, Eicher Motors, and then we had Wipro. All of these stocks now rallied in the range of around 1 to 2.5%. Maruti Suzuki was a clear winner today after a CLSA note said that we expect a double-digit growth for Indian passenger vehicle business for that matter. That went well for all the auto stocks, including Maruti Suzuki, Agam, for that matter. On the flip side, if we are looking at, this is...
Hang on. Before we go to the flip side, actually, I want to come back to Vishwesh on the auto stocks because we've seen that upside. If you can take us through some of those calls there.
See, I guess the autos, I mean, if I had to speak the relative performance of the entire sector, autos has not run up a lot, barring Maruti,
Right.
In my opinion, the most, overweight sector for the market participant was the banking. Now, the banking is taking knocks, so obviously people who want to park their money in a short term would jump for the auto. So, in autos, in my opinion, M&M has not run up. If you see the, in my opinion, the Escorts, or for that matter, Apollo Tire, these are
Yes.
the auto ancillary companies where we have not seen the kind of run up we saw in the banking. So my
Right.
guess is that coming next series, relative outperformance of the autos can be seen, and in particularly my guess is my money would be on the tire companies.
Right.
C8 followed by Apollo Tire, and MRF would be the one.
Right. Okay, so now we can go to some of the losers, and of course, pharma stocks stood out there in terms of losses today.
So yeah, pharma stocks after the Taro Pharma earnings, which was released overnight, that led to carnage across the pharma stocks that we saw. We saw Sun Pharma tanking next to close to 5%, 4.5%. Next in the list we have Cipla, Aurobindo Pharma, and again now Adani Ports and Special Economic Zone. That was the stock which made it to the losers list just in the fag hours of the trade. This is after the CAG observed that the interest of Kerala was not protected in the agreement with Adani Port for implementing the 7,525 crore with Hinjum International Deep Water Multipurpose sea project, which was estimated at a cost of around 7,525. Now, of course, 67% of the funding was coming in from the state, and the report observed that the funding was probably not that the financial benefit would not be as beneficial as the equivalent to the investment which the state would be putting in for this project. So obviously we saw that disappointment coming in for the nifty stocks. How was the space? How was the momentum in the mid caps case for that matter?
Well, not too good, So when it comes to the broader markets, coming to your advanced decline ratio, I'm looking at nearly one gainer for four losers when it comes to the broader indices. We have a lower circuit on Videocon Industries on account of its loans, with the potential risk out there. Bhushan Steel, JP Associates, Indocount, Sharda Cropchem reacting to its earnings. We've also seen a downgrade in Ratan India Power. Bank of India, of course, building on losses that we've seen from yesterday. And on the other hand, on the gaining end, we have SREI Infra up as much as 5%, Kaplan Point also gaining 4%, Viara Logistics and City Union Bank gaining substantially as well. DB Corp also stands out in trade, gaining over 2%. But on the whole, when it comes to the mid caps, the momentum is towards the losers. But I was just talking to Vishwesh some time ago, and he was talking about the realty counters. What's your take on that?
I think a reality counter, if you see, I was talking sometime back a real, relative outperformance. So against all expectation, real estate stock has moved up very sharply in last 2-3 months. DLF, HDL, Godrej Property. So in my opinion, these stocks were not very high regarded just 3-4 months back. So now when the market is taking, knock, in my opinion, this stock should be the first one to fall out on account of profit booking. At the same time, there are bears right now available in the market who feel the reality may go down. So I guess the HDL, the DLF of the world, followed by the IBUL real estate, should take at least 5 to 7% cut from the current level. Today's session HDL was down 8%. My guess is that it has broken a very important support, and the way OI is right now shedding in the stock, I think today there was a 10% built up in the DLF. So my guess is that in a coming session, Nifty breaks 9370, reality would be the best stocks to short.
Right.
So yeah, we've also seen that reality stocks running up quite a bit in the recent past also, for that matter, Ragam, if you've seen.
Right, absolutely. Of course, that's what we have so far in what's gone down in trade today. Do remember we have Tata Motors earnings coming up, well, any moment now for that matter. So we will be keeping an eye on that. We're not expecting a great quarter, but perhaps a sequential improvement. But with that, I'm going to thank Vishwesh for joining us today. It was a pleasure speaking with you. And as per you guys, we'll see you once again tomorrow on the Market Wrap. But till then, it's goodbye.